Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today's podcast is sponsored by The Great Outdoors. Today we're going to do a report on edibles. With this pandemic and stay at home and everything else, edibles are taking off. So we're going to take a couple of reports that have been released over the last 2 quarters, kind of compile those. I've also grabbed an older one from 2017 that had some predictions, and so I thought for fun, we'll take a look at that. So a report from New Frontier Data titled Cannabis Infused Products, they projected back in 2017 that the legal cannabis industry would grow by 25% in up to 2020, exceeding $18 billion, with the cannabis infused products representing nearly $3 billion or 17% of that total. In reality, we can see a combined sales in California, Colorado, Nevada, and Washington hitting 50 million by July of 2019. With an edibles market share hovering around 12%. So they were a little optimistic. They missed the mark. Taking a look at what top purchasing factors were in 2017, at 87%, it was product quality, followed by price, and then ingredients at 70%. Nowadays, you just hear what's the highest THC at the lowest price. So I think the product quality was more in 2017 about the lack of awareness or understanding about the brands. And now there are some trusted brands, and so people are going straight to price and convenience, but they also want to know what that milligram percentage is. So 2017 had quality as a fundamental factor in purchasing decisions for both CBD and the marijuana markets. Consumers listed ingredients and dosage and testing results all as the most important factor, with companies responding by investing heavily in both product development and manufacturing technologies. Edible popularity has definitely increased. It looks like around December of 2019, it finally hit 20 million and then jumped to 30 and then 40 and then 50 million by July of 2019. So breaking that down by state, California being a huge state that they are, it looks like California encompasses all other states combined. Nevada's market is comparatively small, which isn't surprising. Washington is worth noting. It's a great state for edible sales. Colorado has consistently outsold its fellow first adopters of legalization of both raw volume and market share. So this market share by state is kind of all wonky all over the place, as you have Nevada jumping on board and then California jumping on board. You have high sales initially, and then it kind of comes down, probably because it's a novelty at first. Not many people want to spend $23 for a beverage, which is why Olala in Washington State just went out of business. 420 prices are around $10 per milligram. So a 100 milligram beverage is going to be anywhere from $10 to $15. That's going to be the going price, in my opinion, having seen the deals on 420 and then the volume. With edibles being a high seller during this pandemic, a lot of people like beverages as long as it's the right price. So people go in initially, they'll buy an edible, but then those sales kind of level off, with the exception of being in Washington every Friday between hours of 3 and 5, at least 1 out of every 5 purchases has an edible, and it might even be half. I forget, but I know it's a lot on Friday between 3 and 5. At least a third of all edibles for the month sell between that time frame. So it's a huge seller on Friday afternoons. So Seasonality has its own trends for purchasing behavior. So this graph will depict differences for month-over-month growth of edible markets. So edibles outperformed the total market by 20% in 2 out of the 4 Decembers measured, and never less than 10%. On the other hand, they sold 4 to 10% worse than the total market every April. So in the past, it looks like edibles weren't discounted on 420. I think 2020 was the exception to that. But generally on 420, we see a lot of flower and pre-rolls being the dominant purchase on 420. Christmas and Valentine's, on the other hand, you might see a lot more sweets and chocolates being sold. So looking at seasonality year over year, you can see that the edibles have stayed relatively consistent over the 4 years, and so it is going to be a little bit different with California recently onboarding. They had some regulatory issues where there was a flood of product that wouldn't have met the new requirements. So that kind of skews the data when they just drop the prices on that. So there's a little asterisk probably with that. But other than that, you can see the mature legal states following the aforementioned pattern of a slow April and a December rush. And you can see from March is an exceptionally good month for edibles, along with months of early summer. All right, breaking down edible segments by each state. Gummies make up the majority of edibles sales in California, Nevada, and Colorado. but they're not technically legal in Washington. So that's why it's only 21.9%. Those are chewies, not gummies. So chocolate is pretty evenly popular across all the states. While brownies might be a classic edible, chocolate is much more popular. So edibles share by package size. Canada only has a 10 milligram cap. Washington and most other states have 100 milligrams. The 100 milligram THC package has always been and continues to be the dominant edible market. And so you see these 100 milligram edible market share rising from 57% of sales in late 2015 to 84% in third quarter 2019. So as a 100 milligram package is the largest edible package size allowed in all current legal states, it makes sense that this is the most popular. So looking at the average item price of edibles, Washington State is incredibly competitive. We don't have vertical integration, so a producer or processor cannot also be a retailer. So that means that it's incredibly competitive pricing more than anywhere else. That's why you can see this price go straight down, which makes it look like if you were only looking at Washington's data, that it would be a commoditization and just prices are going down, which it will once other states open up. They're going to have to follow our competitiveness. It's a race to the bottom in terms of pricing, just like any other commodity. But when you look at Colorado, it looks like their average item price for 100 milligram edibles was steadily around $18 over the last 3 years. Washington obviously has a lower average item price that's around $14 to $18. Nevada has almost a monopoly on retail stores, and since they're relatively new, their average item price is around $20, which dipped from $26 previously. Don't have figures for California or Chicago yet, but Illinois will give us those figures eventually, and California will be updated soon, as well as Canada. By June, we should have that data. So flower and pre-rolls are still the most popular category. Concentrates are continuing to rise, but beverages during this stay-at-home pandemic is definitely the popular go-to. In terms of which types of edibles are popular, gummies and chocolates seem to be the safest bet. In terms of flavor preferences, you're seeing soft candies, and of course, consumers like high doses and low prices. All right, let's look at the top 5 candy flavors from Brightfield Group. Top spot is caramel and raspberry. I think those are 2 separate flavors at 12.7%. Grape took second place at 9.6%. Watermelon at third, 6.9%. And then chocolate and strawberry, I think those are also separate flavors, sharing the 4th spot at 6.8%. That's surprising because most of the edibles that I've seen in the States are generally all chocolate. Gummies are the most popular, but in terms of flavors, I would have thought that chocolate would be up there. One of the more interesting stats is that while most of the flavors for cannabis candy stagnated quarter over quarter, starting in 2020, grape actually thrived. So of the top 5 flavors, grape had the highest quarter over quarter growth at 153%. So it looks like flavors that have lower price points are losing retail presence. That's a trend that's kind of holding from the top 5 flavors except grape, likely due to the increased competition for shelf space at a lower price point. While there's less competition as the price begins going up, making it easier to break through at those price points. The shift towards top shelf products and flavors have coincided with people using edibles positioned for relaxation rather than fun or medicine. While the latter 2 positioning saw items such as brand losing retail presence for the first quarter of 2020, relaxation grew significantly and even more so when considering only expensive cannabis products. So this indicates that a large number of people who are going to retail shops searching for relaxation branded products are willing to drop large amounts of money on their desired products, while the relative number of those seeking to use cannabis candies for fun is decreasing. So it looks like grape may be an indicator of innovation. So the bulk of grape's growth is occurring at expensive price points, such as products that have been gaining retail space across all pricing tiers, indicating that it's a general disruptor and has been largely ignored by the cannabis industry until recently. So this increase demonstrates that businesses are actively looking for underrepresented flavors so that they can offer a greater variety of products to the consumers, and that the consumers at large may not be flavor loyal. Inferring from the data, we can see that cannabis consumers want a little variety in their cannabis candy, and that retailers are willing to rotate in new flavors in order to satiate and capitalize on the demand. Barring a large shift in consumer preference, it's likely that most of the top 5 flavors have reached their highest retail capacity, and the real challengers to that shelf space are items which grab the eye of the consumer by being different from the rest. Obviously, manufacturing the right product at the right size at the right price is key. Even from this New Frontier Data Report 2017, gummies were leading the edible product category. Looking at some of these projections that still haven't quite hit, looking at 4.1 billion by 2022. The 2.8 billion in 2020 might happen. California and Washington are hitting about $1 billion each. So if each state can hit $1 billion, that's on target. Edibles in 2017 had about a 12% market capture. They expected that to increase to 14%, but it looks like it's still hovering there as flower is the dominant category, followed by concentrates in terms of individual SKUs. Pre-rolls are really popular. Right now, though, during this pandemic, obviously edibles are increasing in sales. And a lot of those purchasing decisions are based on price, convenience, all the way down to whether or not that company is ethical. But with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.